This week, one of America's most famous billionaires set the internet on fire with a single idea: that every worker, from the CEO to the janitor, should own a piece of the company they work for. Some called it genius. Some called it nonsense. But almost nobody asked the more interesting question: who is this guy to say it? Because before Mark Cuban was a Shark Tank star, an NBA owner, and a multi-billionaire, he was a broke bartender sleeping on a floor with 6 roommates, drinking powdered milk to save money. This is the story of how he got from that floor to $5.7 billion and the money lessons hiding in every step. And the timing of his message matters because it's not just talk. Cuban's argument that sharing equity is the real fix for income inequality comes from a man who once made 300 of his own employees into millionaires in a single day. He's not theorizing. He's describing something he actually did. So to understand why his idea carries weight and to steal the wealth-building playbook underneath it, we have to go back to the beginning, to a working-class kid in Pittsburgh who started hustling for money before he could legally drive. Mark Cuban was born in 1958 in Pittsburgh in a solidly working-class family. His father did automobile upholstery, spending his days reupholstering car seats to pay the bills. There was no trust fund, no connections, no head start. What there was from the very beginning was an almost pathological drive to make money, not to spend it, but to have it, to control it, to be free. And that drive showed up young. At 12 years old, Cuban wanted a pair of expensive basketball shoes, and his father told him, in effect, get a job. So he did. A family friend was selling garbage bags, and young Mark started buying boxes of them wholesale and reselling them door to door around the neighborhood at a markup. Think about what that requires from a 12-year-old. Knocking on strangers' doors, taking rejection, doing the math on cost and profit, all to fund a pair of sneakers. That's not a cute anecdote. That's the entire entrepreneurial personality fully formed before puberty. The product didn't matter. Garbage bags, stamps, coins, he traded all of them as a kid. What mattered was the game. Buy low, sell high, keep the difference. By high school and college, the hustles multiplied. He sold stamps and coins. He gave disco dancing lessons. During a college newspaper strike in Pittsburgh, he and a friend drove to another city, bought stacks of newspapers, and drove them back to sell to people desperate for news. When it came time for college, his logic was pure Cuban. He chose Indiana University specifically because it had the cheapest tuition of any top-tier business school he could find. Even his education was a value play. Why pay more for the same degree? He reasoned, when the diploma reads the same and the debt doesn't. And in college, he didn't just study business, he ran them. He gave those dancing lessons on campus. He famously bought a bar called Motley's Pub while still a student, ran it, and packed it with promotions until a wet t-shirt contest and an underage drinking issue got it shut down. But the lessons stuck. He learned he could take a struggling business, apply energy and marketing, and make it boom. He graduated in 1981 with a business degree, no money, and a conviction that most people simply didn't work hard enough or think creatively enough to get rich. After a brief stint back in Pittsburgh, Cuban did what ambitious broke young people have always done. He chased opportunity somewhere cheaper and hungrier. In 1982, he packed everything he owned into a beat-up car and drove to Dallas, Texas, a booming Sun Belt city with no state income tax and a wide-open business culture. When he arrived, he had almost nothing. He moved into a 3-bedroom apartment and slept on the floor because 6 other guys were already living there and the bedrooms were taken. 7 men, 1 apartment, 1 future billionaire on the carpet. Those early Dallas years are worth sitting with because they were genuinely grim, and Cuban never hides it. He has described drinking cheap powdered milk instead of the real thing to save money, eating ketchup and mustard sandwiches, and having his electricity and car insurance lapse because he couldn't pay. He shared closets for bedrooms. His credit was a mess. From the outside, he was just another broke 20-something going nowhere. But he was doing one thing obsessively that the others weren't: reading everything he could find about computers, software, and business for hours every single night, building an asset no one could see yet. And the loneliness of that early grind taught him something he'd repeat for the rest of his life: that the willingness to do what others won't when no one is watching and there's no reward yet is the entire game. He wasn't smarter than the other guys in that apartment. He just decided that his free time was for learning a valuable skill, not for comfort. Years later, worth billions, He would tell young people the same thing. Nobody's going to give you anything. The effort is the only advantage you fully control, and it is available to absolutely everyone who's willing to pay its price. He tended bar at night to survive, but he was hunting for the real thing, and he found it in a new industry almost nobody understood yet: personal computers. He landed a job as a salesman at a software retailer called Your Business Software. And here Cuban did something that reveals his entire character. One day, instead of opening the store as instructed, he left to close a deal with a client who would bring in a large sum of money. He made the sale. His boss fired him anyway for disobeying orders. Getting fired, Cuban later said, was the best thing that ever happened to him. It also helps to understand what systems integration actually meant because it reveals why Cuban won. In the 1980s, companies were buying these strange new personal computers by the truckload and had no idea how to make them talk to each other, share files, or run business software. It was chaos. Cuban's MicroSolutions walked in and solved that chaos, installing networks, configuring software, making the technology actually work. It was unglamorous, technical, hair-pulling work, and precisely because it was hard and boring, few competitors did it well. Cuban had found a painful problem that businesses would pay almost anything to make disappear, and he became the best in his city at making it disappear. Because in 1983, with that client in his pocket and roughly $0 in the bank, he started his own company, MicroSolutions. It was a systems integration business, helping companies set up and network their new computers, an unglamorous, essential service exploding in demand. He taught himself to code by reading manuals late into the night. He was relentless, working obsessively, learning everything, outworking every competitor. His philosophy was simple and brutal. Know your business better than anyone else alive, and the sales will follow. Within a few years, MicroSolutions had millions in revenue. In 1990, Cuban sold MicroSolutions to CompuServe for about $6 million. After taxes, he personally walked away with roughly $2 million. For a kid who'd slept on a floor drinking powdered milk, $2 million was life-changing, real, permanent freedom. And here's where most people's story ends. Cash out, relax, coast. Cuban did retire, sort of. He traveled, he partied, he lived. But a restless mind with $2 million and a hatred of wasted potential doesn't stay retired long. His second act would make the first look like a rounding error. There's a detail from the MicroSolutions years that shows the discipline underneath the hustle. Cuban has said that even as the company grew and he started making real money, he kept living like he was broke, banking almost everything. He wasn't buying sports cars and mansions with his first success. He was stockpiling cash and, crucially, treating every year as tuition in the school of business. That combination, earning well while spending little and learning constantly, is what turned his first modest exit into a launch pad rather than a finish line. Most people who get their first taste of money inflate their lifestyle to match. Cuban did the opposite, and it made all the difference. The idea that made him a billionaire came from something small and personal. He missed listening to his college basketball team, the Indiana Hoosiers. He was in Texas. The games were in Indiana. There was no way to hear them. And in the mid-1990s, a strange new thing called the internet was spreading. Cuban and a friend, Todd Wagner, had the same frustration and the same thought. What if you could broadcast audio, radio, sports, anything over the internet to anyone in the world? In 1995, they started a company to do exactly that. They called it AudioNet and later Broadcast.com. Today, streaming audio and video over the internet is so normal, it's invisible. In 1995, it was science fiction. Internet connections were painfully slow. Most people use screeching dial-up modems, and the idea of listening to a live radio station or a sports game through your computer struck most people as pointless or impossible. But Cuban saw where the wires were heading. He bet that bandwidth would explode, that the world would want its media on demand, and that whoever got there first and biggest would own a brand new frontier. He was early, he was right, and being both at once is how fortunes are made. It's worth pausing on how wild the dot-com era really was, because it explains both Cuban's fortune and the danger inside it. In the late 1990s, investors threw money at anything with a dot-com in its name, often regardless of whether the company earned a single dollar of profit. Valuations detached completely from reality. Companies that had never made money were suddenly worth billions on the stock market. It was a mania, a bubble, exactly the kind of collective euphoria we've broken down in other videos on this channel. Cuban was riding the biggest wave in modern financial history, and the thing about giant waves is that they eventually, violently, break. Broadcast.com grew fast, streaming radio stations, sports events, even corporate conference calls and shareholder meetings. It became one of the marquee names of the dot-com boom, the frenzied late 1990s period when internet companies with barely any profit were valued at staggering sums. In July 1998, Broadcast.com went public. Its stock, offered at $18, closed its first day of trading around $62, a jump of over 250%, one of the largest first-day gains in stock market history at the time. On paper, Cuban was suddenly spectacularly rich. But paper is the key word, and this is the most important financial moment of the entire story. In April 1999, at the absolute peak of dot-com mania, Yahoo, then the most powerful company on the internet, agreed to buy Broadcast.com. The price, $5.7 billion, paid entirely in Yahoo stock. Cuban's personal share was worth well over $1 billion. He had gone from a floor of a Dallas apartment to a billionaire in 17 years. But he now faced the single most dangerous question in finance. What do you do when your entire fortune is tied up in one soaring, wildly overvalued stock? Most people, drunk on a rising market, would have held. They'd have believed the hype, assumed Yahoo would climb forever, and refused to sell a winner. And they would have been destroyed, because within a year, the dot-com bubble burst and Yahoo stock collapsed by more than 90%. Fortunes built on internet paper evaporated across America. But not Cuban's, because Cuban did something brilliant, disciplined, and almost unheard of at the top of a mania. He protected his money. Working with investment banks, Cuban used a strategy called a collar. In simple terms, he bought financial insurance on his Yahoo shares, locking in a minimum price he could sell them for, no matter what happened to the stock, while giving up some of the potential upside. It cost him something up front. It capped his gains, and it was the greatest trade of his life. When Yahoo cratered, Cuban's fortune was already protected, effectively converted to safe cash equivalent value near the top. He didn't just get lucky in a bubble. He had the discipline to lock in the wind before the music stopped. That is the difference between a gambler and a rich man. Now remember those employees, because this is where this week's headlines connect to history. When Broadcast.com sold, roughly 300 of its 330 employees became millionaires because they held stock in the company. Not just the founders, not just the executives. Regular workers, engineers, salespeople, staff walked away wealthy because they'd owned a piece of what they built. Cuban watched that happen, and it stamped a conviction on him that he still preaches today. The fastest, fairest way to spread wealth is to give the people doing the work a real ownership stake in the outcome. That is exactly the idea that put him back in the news this week. Cuban has been arguing loudly that public companies should give stock not just to executives, but to every employee proportionally, from the CEO down to the lowest paid worker. His logic: if a CEO gets stock worth 10% of their salary, a janitor should get stock worth 10% of theirs too. When a company wins, everyone wins, and the obscene gap between the boardroom and the break room starts to close. Critics call it impractical. Cuban calls it the thing that literally happened at his own company and made hundreds of ordinary people rich. It's worth appreciating just how perfectly Cuban timed the Broadcast.com sale, because timing is a skill disguised as luck. He sold at the absolute zenith of the dot-com bubble, April 1999, when internet valuations had reached a level of insanity that would never be seen again. Within 12 months, that entire market of euphoria collapsed into one of history's great crashes, which we've covered in depth on this channel. Companies that turned down billion-dollar offers in 1999, betting they'd be worth more later, watched their fortunes evaporate to nothing. Cuban took the money and, just as importantly, locked it down. Selling near the top is one of the rarest and most valuable skills in all of finance, precisely because it requires overriding greed at the exact moment greed feels most justified. But let's return to 1999, because a newly minted billionaire needed a new obsession, and Cuban found one that would make him a household name. In January 2000, He bought the Dallas Mavericks, his adopted city's NBA basketball team, for about $285 million. The Mavericks were a laughingstock, one of the worst-run franchises in professional sports, losing games and money for years. Cuban did to the Mavericks exactly what he'd done to a college bar and a software company. He poured in energy, money, obsession, and fan-first marketing, and he transformed them. He sat courtside screaming at referees, racking up millions in fines because he genuinely cared. He upgraded everything: planes, locker rooms, technology, treating players and fans like customers who deserve the best. The results came. The Mavericks became perennial contenders and, in 2011, won the NBA championship. And the financial result was even more staggering. In 2023, Cuban sold a majority stake in the franchise in a deal that valued the Mavericks at around $3.5 billion. The team he bought for $285 million had multiplied more than tenfold. Even his hobby was a masterclass in buying something broken and cheap and making it great. Then came the chapter that made him famous to people who'd never bought a stock or watched a basketball game: Shark Tank. Starting in 2011, Cuban became a star investor on the hit TV show where entrepreneurs pitched their businesses to a panel of wealthy investors. Suddenly, millions of Americans knew his face, his blunt style, his ruthless questions about margins and customer acquisition. Shark Tank turned Cuban from a business world billionaire into a pop culture icon and quietly reinforced his core message to the public. Business is learnable, hustle is teachable, and wealth is not a secret club, it's a skill set. And in recent years, Cuban has channeled his fortune into something surprising for a billionaire, attacking one of the most predatory industries in America: prescription drug pricing. He launched Cost Plus Drugs, a company that sells generic medications at a transparent, tiny markup over their actual cost, cutting out the middlemen who inflate drug prices. Some medications that cost patients hundreds of dollars elsewhere sell for a few dollars through his company. It's part business, part crusade, and pure Cuban. Find a bloated, opaque industry and blow it up with radical transparency and lower prices. The garbage bag kid never stopped looking for a better deal. Cuban is also blunt about the role of luck, in a way most self-made billionaires aren't. He readily admits that timing, being in the right industry at the right moment, played an enormous part in his fortune. Broadcast.com sold at the exact peak of a once-in-a-generation bubble. A year earlier or later, the number might have had a zero knocked off it. But here's his crucial point. Luck creates the opportunity, preparation lets you seize it, and discipline lets you keep it. Plenty of people got lucky in the dot-com boom and ended up with nothing because they didn't prepare for the opportunity or protect the winnings. Luck is real. What you do with it is the skill. There's one more Cuban principle worth stealing, and it's about time, not money. He said that one of the greatest luxuries wealth bought him wasn't yachts or mansions. It was control over his own time, the ability to decide what he works on and who he works with. That reframes the entire goal of building wealth. The point was never to accumulate the most possible dollars for their own sake. It was to buy freedom. Freedom from a boss who'd fire you for closing a deal, freedom from debt, freedom to chase the next obsession. Money, in Cuban's philosophy, is just stored freedom. And freedom is the only thing actually worth being rich for. Cuban is also refreshingly honest that not every bet worked. Over the decades, he has invested in countless startups, many through Shark Tank, and plenty of them failed completely, losing his money. He's backed products that flopped and companies that folded. But here's the crucial point about how the wealthy actually operate. He sizes bets so that no single failure could hurt him, while any single success could be enormous. A few big winners more than paid for a pile of losers. This is the mathematics of smart risk. You don't need to be right most of the time. You need to survive being wrong and be positioned to win big when you're right. So how does a man worth billions actually think about money day to day? Here's where Cuban gets genuinely useful for the rest of us, because his advice is shockingly unglamorous. His number one rule for building wealth isn't a hot stock or a crypto coin. It's this: live below your means, aggressively, and build up cash. He tells young people to cut up their credit cards, because consumer debt at 20% interest is a wealth-destroying machine. He tells them to eat cheap, drink water instead of expensive coffee, and save every dollar they can in the early years. Why so obsessed with cash? Because Cuban believes cash is not just money. It's optionality, it's power, it's the ability to move when opportunity appears. The person with savings can take the risky job, start the business, or buy the bargain when everyone else is broke and scared. The person drowning in debt and lifestyle expenses is trapped, forced to say yes to whatever pays the bills. Cash, to Cuban, is freedom in its purest form. It's the same lesson we've seen from Rockefeller to Buffett on this channel. The disciplined saver isn't being cheap. They're loading the gun for the moment that matters. His investing philosophy is just as blunt and just as contrarian. Cuban is famously skeptical of the idea that ordinary people should be actively picking stocks. He's argued that for most people, low-cost index funds and cash are the smart core, echoing exactly what we cover in our video on index funds. But when he does invest in a business, his rule is absolute. Only invest in what you know cold. Know the industry better than the people running it. He calls diversification for its own sake diversification, a way to guarantee mediocrity. Bet big on the few things you understand deeply and protect everything else. And he preaches a philosophy of relentless preparation that connects every chapter of his life. Cuban says he succeeded not because he was the smartest person in the room, but because he was willing to outwork and outlearn everyone. When he started MicroSolutions, he read every manual. When he built broadcast.com, he understood the technology deeply. When he bought the Mavericks, he studied the business of sports obsessively. His edge was never a secret formula. It was the willingness to do the boring, exhausting homework that most people skip. In a world looking for shortcuts, Cuban's entire fortune is a monument to their opposite. So let's pull out the money lessons from the bartender who became a billionaire, because they're some of the most actionable we've ever covered. Lesson 1. Your knowledge is your real capital. Cuban entered every arena, software, streaming, basketball, drugs, and won by understanding it more deeply than his competitors. You don't need money to start building this asset. You need to become genuinely, obsessively expert in something valuable. Expertise compounds, it opens doors, and unlike cash, no crash can take it from you. Before you chase returns, chase understanding. The returns follow the ones who actually know what they're doing. Lesson 2, and maybe the most valuable, protect your windfall. The defining financial move of Cuban's life wasn't building broadcast.com. It was hedging his Yahoo stock before the crash. Anyone can get rich on paper in a bubble. Almost nobody has the discipline to lock in a win, while everyone screams that it'll go higher forever. When you get a windfall, an inheritance, a stock jackpot, a business sale, a bonus, your instinct will be greed. Cuban's lesson is the opposite. Secure it, diversify out of the single bet, and never let one euphoric asset hold your entire future hostage. Lesson 3. Frugality early buys freedom forever. Cuban's powdered milk, 7 roommates, cut up your credit cards, discipline in his 20s is what let him take risks that made him rich. Living below your means isn't deprivation. It's the fuel for every opportunity that comes later. The years when you have the least are precisely when your saving rate matters the most, because that early capital and the freedom it buys is what lets you say yes to the bet that changes everything. Spend like you're broke while you build, so you never have to be broke again. Lesson 4. Buy broken things and fix them. A shut-down college bar, a failing software niche, a laughingstock basketball team, a bloated drug industry. Over and over, Cuban's move was to find something undervalued because it was poorly run, then apply energy and intelligence to transform it. This is one of the most reliable wealth strategies in existence, in business and in investing. The biggest gains come not from perfect assets at full price, but from broken ones bought cheap and made great. Look for the diamond that everyone else has written off as a lump of coal. And lesson 5, the one making headlines this week. Sharing the upside isn't charity, it's strategy. When Cuban's employees owned stock, they worked like owners, and when the company won, hundreds of lives changed. His argument that broad employee ownership could heal income inequality isn't naive idealism. It's a business owner reporting what he saw work. Whether you're building a company or evaluating one to work for or invest in, watch how the upside is shared. Businesses that let their people own the outcome tend to have people who fight for the outcome. Aligned incentives are one of the most powerful forces in all of economics. It's also worth noting what Cuban did with his platform once he had it. Rather than retreating into private jets and isolation, he became one of the most accessible billionaires alive, answering emails from strangers, mentoring entrepreneurs on television, and loudly picking fights with industries he considered rigged against ordinary people, from drug pricing to opaque financial products. Whether or not you agree with all his positions, there's a consistency to it. The kid who resented gatekeepers and easy money grew into a billionaire who keeps trying to knock the gates down. His wealth didn't soften his core belief that the system rewards the informed and the relentless, and that far more people could win it if they understood the real rules. Step back and look at the whole arc. A kid selling garbage bags for sneakers, a broke bartender on a Dallas floor, a self-taught coder, a streaming pioneer who timed the greatest sale of the dot-com era, a sports owner, a TV star, and a billionaire now trying to rewrite how companies share their wealth. There was no inheritance, no lottery ticket, no single lucky break. There was relentless learning, brutal frugality, big bets on things he understood, and iron discipline at the exact moments that mattered most. Mark Cuban isn't proof that anyone can become a billionaire, but he is proof of what the ingredients actually are. So the next time you see Mark Cuban arguing about stock options and inequality, and half the internet rolls its eyes, you'll know what most of them don't. That this is a man describing a fortune he built from nothing, and a day he watched hundreds of ordinary workers become millionaires because they owned a piece of what they made. You can disagree with his politics, but the playbook underneath, know your business, hoard cash, protect your wins, fix broken things, and share the upside, is as close to a repeatable formula for wealth as this channel has ever found. If this story taught you something about money, discipline, and what it actually takes to build wealth from zero, then this channel is exactly where you belong. We break down the biggest money stories on the planet, the empires, the fortunes, the collapses, and the real lessons hiding inside them. Subscribe to Money Stories, ring the bell, and tell me in the comments. Do you agree with Cuban that every worker should own company stock, or is it a billionaire's fantasy? Make your case. See you in the next one.